This is the strongest conviction that I have ever had on AMC stock. And guys, I was not around for the run in 2021. I started analyzing these shorted stocks around of July of 2021. So I was late to the game, right? I saw what happened with AMC. I wanted to get in on other stocks. And you've seen that happen as my channel has evolved and covered numerous amounts of stocks, mainly focusing on short interest stocks. I've never really been a huge bull on AMC as it had that squeeze to $70 per share, and it really did come down from that. All right, so let's just be honest with ourselves. It came down from $70 per share. I waited, I swing traded it a few times, but now is the time where I am finally feeling the conviction in AMC, and I have a lot of evidence to show you guys, to show for it in today's video. So I hope you guys do enjoy it. Drop a like on the video if you guys do enjoy. If you want to join Hootmoney Trade Alerts, it's an exclusive Discord with me and other members. I upload exclusive videos. I do my trade alerts, all of my buy and sells. That is the first link in the description or pinned comment section down below. But let's get right into today's video. So first things first, if we're looking at the technicals, you can see this 3-week chart. It does have a nice green Heikinashi. Green means go on market cipher. This is the technical analysis software that I do use. Also very tight RSIs right here. So it's looking very, very good leading up to earnings right here. We also saw that news today of them refinancing their debt to create an additional $7 million in savings a year. That should also be a good, that's something not priced in by the market. Market reacted today, which is why we're up about 5%. So the only thing I really want to touch on with the technicals is that every time that the 3-week Heikinashi candle has turned green, it has led to some squeeze action. You can see right here in February, it led to some squeeze action. Right here in January 2021, it led to some squeeze action. I'm not predicting anything similar to what we saw right there in 2021, beginning of 2021. But what I am predicting is potentially something new. And this comes down to the failure to delivers in AMC. So as you guys can see at the bottom right-hand corner of the chart, failure to delivers in AMC stock have been picking up dramatically. A failure to deliver is when a buyer of the stock is never delivered the shares. So it'll show up in your brokerage as an IOU, and you'll still get the profit loss as if the stock was going up or down, but you don't actually have that share because it was never delivered to you by your broker. So they report it as a failure to deliver. That needs to be bought back within T plus 35 days. They usually try to settle them immediately for a slight profit. Let's just say they failed to deliver it at $4 per share and it immediately comes down to $3.90. The market maker will try to settle that transaction, make 10 cents on it right then and there, which is why you can see it draw down. But what's important here is the fact that these are in fact picking up, because you saw the exact same thing happen right here in October of the 2020 right there, and then failure to delivers really started picking up in December, and then beginning of January of 2021, that's when the failure to delivers really started picking up, and that's what ended up leading to this squeeze where you see AMC move up to $20 per share. That was the initial squeeze moving with GameStop in 2021. You also saw them start to pick up back here, March of 2021 as well. And they really just started increasing and picking up that trajectory. And it precedes the large move that we saw to $70 per share. And since then, there has definitely been a decline, and we've seen months of consolidation at this point. And now we're seeing those failure to delivers once again start to pick up. So this is my biggest piece of evidence right here behind why I do believe AMC is likely to squeeze. And you can see right here on June 28th, they had almost 10 million failure to delivers in a single day. I mean, it hasn't come close to that in over a year, right? So this is very, very insane. It's lining up as well as with the technical signal right here where it shows that it has squeezed. The S&P 500, I also believe to be in a bear market rally right now, where it would go up to anywhere from 400 to 410. That's on SPY, the ETF that represents the S&P 500. So I'm looking for a pretty big move in not only AMC, but a lot of stocks. But with that being said, what stock is going to benefit the most from a bear market rally? It's probably going to be AMC and GameStop. And I'm bullish on GameStop as well right now, but today we are just going to focus on AMC. So unfortunately, even though it is 2022 and technology works in instantaneous fashion, the stock market is set up with dinosaur technology. And as you guys can see, we only have failure to delivers leading up to June 30th, 2022, even though today is July 20th. It's been almost 20 days later from that failure to deliver date, that settlement date, and we still don't have any new failure to delivers because of the stock market's dinosaur technology. It's all on purpose, guys. I mean, they hide this data on purpose to use it to their advantage, but that's besides the point right now. We're going to try to predict what the failure to delivers could be at right now. So we did see that tick up to 9 million failure to delivers, almost 10 million failure to delivers. And there is some correlation here where we can actually predict what we're seeing right now. And that's by using things such as security lending volume, also short exemptions. So security lending volume is also up. It's also at the highest value that we have seen. If we go back to this all-time chart, picking up to the same values that we saw last February 2021 before that big move up to $72 per share. And if we just take off security lending volume, take off failure to delivers right there, we can also put up on the chart short exempt volume. Now, short exempt volume is not nearly where it was yet in January of 2021 right there, but they are picking up. And that is very, very important because the stock price hasn't really been moving violently to the upside. We'll see it a lot when the stock violently moves to the upside, but it's been a slow and steady climb. And even at these lower values, I mean, short exemption started picking up. And what this shows me, and short exemption is almost like a naked short. You can find information on what a short exemption is in other place on the internet. But what I think is happening is that there's just an overall liquidity crunch specifically right now, and I think it is market-wide because it's not only an AMC stock, it's in a lot of these illiquid penny stocks as well. It's in GameStop. It's in BBIG, a stock I used to cover a lot on my channel. It's in a ton of stocks. These short exemptions are picking up, and I believe it's because those shares just aren't there to fulfill the liquidity in the market. Because of this, I think the most manipulated tickers, AMC, GameStop, are the ones that are going to be benefiting the most on the biggest scale in terms of market cap increases. Another sign that AMC could be ripe right now is the fact that it has been at a steady 100% utilization for quite some time, pretty much the entirety of 2022 right here. And there's really been only one other time in history where it's sustained 100% utilization for quite some time. And again, that was in April of 2021, before that July movement up to $70 per share. Cost to borrow is also showing a peak. It's showing a plateau. It reached the same exact value that it saw right before the huge move up last year, 2021. And now it's starting to come down a bit. It actually jumped back up today, but that's also a good sign. Cost to borrow got pretty expensive here. Now it's starting to come down as shorts try to close their positions. And hopefully, I mean, the sign will be that cost to borrow is low and stock price is high after we get a short squeeze. So another sign right here that AMC is ripe and ready to go is that these on loan new numbers have been absolutely spiking up, and also the stock price has been in an uptrend. This is a really good sign. The on loan new numbers, as you guys can see right here, it's almost 10 million new shares a day. These are not the same numbers that we have seen since all the way back here, February to April 2021. We have not seen this many new shares on loan in quite some time, and we're also seeing it at a lower value. I mean, this is a macro low for AMC. I mean, Market Cipher 3-week chart, which is a pretty long time frame, is given that green dot on the oversold side. And this is a 3-week chart. This is macro. I mean, it's predicting a macro bottom here, and it's also correlating with an increased amount of shorting. It doesn't make sense. And in my opinion, this is what happens when they're running out of liquidity in the market. They're fulfilling that liquidity by just shorting shares, doing short exemptions, failing to deliver the stock. And this is when we can actually capitalize it and see an enormously large move. So on top of the increases in failure to deliver, short exemption security lending volume that we have seen over the past month or so, you also have seen short interest go down. So there's an increased amount of under the table shorting via these short exempts, via the failure to delivers, but actual short interest is going down. And what this tells me is that some smart players know that AMC is going to rip. They're trying to close out of their positions, but they don't want to do it by creating a massive spike up in price. So what they do instead is they create this artificial liquidity by failing to deliver the stock, keeping that stock price low, allowing shorts to get out before it actually balloons and blossoms and spikes up to the freaking moon. We can also look at historical implied volatility for AMC. It's charted out here using the index mean of the implied volatility. It's charted out in yellow. You can see all the way back to the beginning of the year here in 2022. And usually we have seen some upside from the implied volatility when it is sitting under the 125% level. So I'm not telling you guys to go out there and buy call options, but it's sitting at a relatively cheap value right now. And once it gets over 150% implied volatility, well, that's when you might want to be looking to exit your options. And then if it goes up to 200% implied volatility, that's another exit signal for options. The last thing I want to look at is the unusual whales options flow, because options have definitely been doing some weird stuff lately. Yesterday, we saw this absolutely huge $3 million put option that came in as a cross trade. Definitely something institutional right there. There's no shot this is a retail whatsoever. It was a cross trade, meaning that it was like probably from broker to broker, right? And that was for $3 million. The other day, right before, there was a $1.06 million call option. Now, keep in mind, all of these put options are down as of today, right? Because we are up today. We also saw some call options come in today as well, over 100,000. So the sentiment is definitely looking good as these put options are down, right? We also saw, this one right here for 1 million and then 495,000 as well on a put option. So, and this was a $30 call option, by the way. So keep that in mind as well. $30 is very far out of the money for AMC, and this is the largest premium we saw for over a month up until that point. This is huge, my friends. This is absolutely huge. We have not seen nearly this amount of volume in the options market for AMC in quite some time. $850,000 on a call right here. This was on 7/14 as well. So this also screams to me that artificial liquidity is being printed out in the options market to control this as well. Let's just say a big whale wants to exit a short position in AMC. They need to do it without creating a huge effect on the stock price. And that's where the failure to delivers come in. That's where the short exempts come in. Obviously, that's where dark pool comes in as well. I didn't even touch on the dark pool, but the dark pool is also one of the biggest culprits. And then we have the long synthetic shorts also driving liquidity in this stock, which is through the options market, and we're seeing an uptick in that as well. It seriously is looking like a liquidity crisis here in AMC, and this is exactly why I am bullish on AMC now, and I have not really been bullish throughout the past year. I'm very excited. I've been waiting for this day. I've been waiting for this day for so long. Hope you guys help me and accept me with open arms. Sorry I did not buy 60 plus, 40 plus, but I'm buying now, and I'm liking it, guys. So drop a like on the video if y'all enjoyed today's content. Hootmoney is out for now. Join Hootmoney Trade Alerts if you want all of my buy and sell alerts, private Discord, private video, great trading community. Everyone there has had an absolute phenomenal time. People will just show their charts. They'll be like, this is where I joined Hootmoney Trade Alerts. And it all changed. So Hootmoney Trade Alerts, first link in the description down below. That's all I got. I'll see you guys next time. Have a wonderful day. I will be live tomorrow morning, market open live stream, 9:15 a.m., 15 minutes before the market opens. See ya.